According to Wall Street bet analyst Pierre Ferragu, Tesla is facing unprecedented demand. The analyst has said this after visiting Tesla's Berlin Gigafactory, stating that a lot of people agree that EV demand is way above what was expected a few years ago. He believes that if Tesla can successfully meet the rising demands, its stock price can go as high as $530 in no time. And Tesla may be worth $10 trillion by 2030 if it's able to produce 20 million electric vehicles per year by that time. Hey guys, welcome back to Everything Tesla Stock. About 6.6 million global EV purchases were recorded in 2021, from 3 million the year earlier. This shows that there is an increased demand for electric vehicles, which may signal a massive shift to clean energy. In the past decades, the demand for electric cars has increased tremendously, and now more than ever, more people are buying and using electric cars, and vehicles in general. Most Tesla bulls believe that this increase in the use of electric vehicles will have a positive effect on the Tesla car sales and demands. Tesla has been in the EV business for years, and during this time, it's expanded its markets and increased sales through improved technology and scaling of its revenue. With the current and expected trend in the use of electric vehicles, what will the future be like for EV companies' stocks, especially Tesla's? Let's find out. Before we get into it though, if you like this type of video, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. According to Tesla CEO Elon Musk, Tesla has no demand problem. However, the automaker is facing certain difficulties in ramping up deliveries of its electric cars and coping with the effect of inflation. Tesla isn't immune to these market changes, and as such, it is only expected that its deliveries and sales fluctuate during this period. Luckily, despite the recent dips, many stock analysts and experts in general, as well as investors, are still hopeful that Tesla will eventually outperform the market. Why have these stock analysts remained bullish on Tesla despite the tough market conditions? Keep watching to find out. In a recent interview with CNBC, CEO Gerber Kawasaki Wealth and Investment Management Ross Gerber said that there was no need to be bearish on the idea of electric vehicles since this is fast becoming the new trend. The switch to electric cars is happening at a rather fast rate, and a lot of people as well as countries are beginning to see the benefits of using clean energy. Countries like Australia have enforced policies to promote the sale and use of electric cars in these countries. In recent news, the Australian government disclosed plans to impose new regulations to help improve the affordability of electric cars and to boost their sales. According to the country's Minister for Climate Change and Energy, Minister Chris Bowen, Australia is still behind in terms of electric car usage, with only 2% of cars sold in the country, compared with 15% EV sales in Britain, 17% in Europe, and he also stated that by cutting taxes for electric cars, the company can reach its 2030 target for cutting carbon emissions to 43% reduction from its 2005 levels. Most countries with these policies aim at reducing emissions from petrol cars, which, without appropriate laws to mitigate them, can lead to big climate changes in the coming years. Also, the Canadian government has set a mandatory target for all new light-duty cars and passenger trucks in the country to be zero emission by 2035. This shows that more people are starting to consider electric vehicles, which is a good thing seeing that more governments around the world are likely to adopt similar policies. Likewise, oil prices have become unstable in the present years, and there is a high likelihood of oil prices going even higher in the coming years. So, moving to EVs may actually save costs that some internal combustion engine cars might have in the future. In Ross Gerber's words, there isn't a more compelling time to go green, buying electric and putting solar on your house. Tesla's production has been very good in the past 2 quarters of the year, and we're hoping that there's no disruption in China in September, and we expect record numbers from Tesla this quarter. Do you think Tesla can achieve this? Let us know in the comment section. According to the analysis, there is an increase in the demand for electric vehicles at a rate that has never been seen. This is in fact true, and is seen in most EV markets globally. About 2.4 million EVs were delivered in mainland China in the first of this year, which was about 26% of all car sales in the country. In the same period in 2021, electric car sales were only 10% of China's car sales, indicating an increased demand for electric vehicles in the country. Europe also had rising numbers in EV sales, recording about 1.1 million EV deliveries in the first half of the year as well, making up 20% of their car sales, while electric vehicles represented 6% of all passenger vehicles delivered in the US. Gerber believes there's no better time to buy an electric vehicle, and seeing the rising trend in EVs, there are some reasons to believe this. EVs are proving to be better alternatives to ICE cars in terms of promoting clean energy. Likewise, with an increasing demand for these cars, prices of electric vehicles might also start to surge. At the moment, the average cost of an EV is less than $70,000. However, with high demand, more money can be spent on purchasing these cars. Speaking in the same interview, Seth Goldstein, equity strategist at Morningstar, also reiterated the importance of investing in clean energy. He, however, spoke from the point of investing in lithium, which is a major requirement for making electric vehicles. He said, "When we look at the best way to play the EV adoption theme, we like lithium as one of the best trends because all EV batteries need lithium as the energy storage component of the battery. So when you're investing in lithium, you're just investing that there will be more EVs on the road tomorrow than there are today." According to Goldstein, the increasing EV market will have a positive effect on the demand for lithium, and that could also be another profitable investment. Several analysts are optimistic about the future of the EV market, and this will be of great benefit to Tesla since it is a leading electric car company and has an even wider market compared to other EV makers. Tesla already has high demand for its electric cars and may even have more with the expected surge in the demand for electric cars. According to Pierre, since electric cars have become more popular, market shares for Tesla and its competitors may be dictated by their ability to ramp up production volumes. Coupled with the increased demand for Tesla cars, the car maker is also trying to cut costs, especially with batteries. Even though Tesla has already cut its Model Y battery cost by up to $3,000 by dropping the larger cells, it still intends to cut costs further by using a dry coat process for its 4680 batteries. Although some experts have claimed that Tesla is experiencing some difficulties in pulling this through, the automaker still has a high chance of achieving this milestone. Tesla has led the electric vehicle industry for years, and it's going to keep outselling its peers while maintaining those higher margins. But in order to stay ahead of electric car companies, Tesla has to be able to reduce the cost of its batteries, and if it's able to do that, it's a very possible feat to achieve. It is evident that the demand for clean energy infrastructures will be high in the next few years, and so Tesla is going to be well positioned to benefit greatly from this increased demand. Aside from cars, Tesla also makes solar panels, which will drive enormous sales and profits for the company. At the moment, Tesla solar panels are highly rated in its market, especially due to their affordability, which has them currently priced between $9,600 and $48,352. Tesla is reportedly rated as one of the largest solar installers in the US, installing solar panels and solar roofs in at least parts of 25 states in the country. This is only one of the many possible markets that Tesla can potentially sell its solar panels in. With more markets, the company can further increase its revenue and profit margin. According to Ross Gerber, investing in electric vehicles and Tesla could possibly be the most important investment scheme of the next decade, adding that investing in the EV theme is one of his major focuses in the coming years. However, even though Gerber is very bullish on investing in electric vehicles, he did note the risk involved in investing, which should be considered even when investing in a very promising venture like electric vehicles. Needless to say that this is indeed true. It's very important to consider the current performance of a business and its future potential before putting your funds in. Do you think that the EV market is going to continue to expand and more people are going to buy Tesla cars in the future? Let us know. And if you would like to know more about Tesla and what it's been up to, go ahead and click on one of these two videos on your screen. See you there.